Hello friends, in the series on the income tax cases, today we will discuss a very unique issue which do not arise very frequently, but that issue is very important to understand, that whether the CIT appeal can reject the appeal of the assessee if the tax on the regular assessment is not deposited by the assessee by taking the shelter of section 249 subsection 4 clause B. This issue has been taken by Surat ITAT in the case of ROHINI Enterprises Private Limited versus Income Tax Officer, and this case has been reported in 112 ITR Tribunal, short notes 39. The date of the judgment is 17th May 2024. In the present case, the facts are very interesting. In this case, the tribunal has given a clear distinction between advance tax, between self-assessment tax and tax on regular assessment. There is section 249 subsection 4 clause B, which says that if the assessee has not filed the return of income, and if according to the assessee there is advance tax liability of the assessee, then before filing the appeal before the CIT appeal, this advance tax should be deposited. If this tax is not deposited, then the appeal of the assessee cannot be entertained. The main crux of section 249 subsection 4 clause B is that if according to the computation of income of the assessee, the advance tax of the assessee for any assessment year is not deposited, then his appeal cannot be admitted. But in the present case, there was no advance tax according to the assessee, but tax was created by the assessing officer in the regular assessment, and tax on regular assessment was made. In this case, the assessee has not filed the return of income. That is why the notice under section 148 was issued to the assessee. In response to the notice under section 148, the assessee was not able to file his return of income in response to the notice under section 148. But the assessee submitted its computation of income by declaring a loss of 87.64 lakh, and assessee submitted its profit and loss account and balance sheet. And the assessee said that since there are multiple legal proceedings against the assessee, so the assessee is not in a position to submit its return of income. So it was clear that there was no tax liability of the assessee of advance tax according to the assessee. The assessing officer was not convinced with the computation of income of the assessee, and he made a demand of rupees 87.64 lakh of the assessee by rejecting the books of accounts of the assessee. The assessee filed the CIT appeal. When the CIT appeal went to the matter, he said that the appeal of the assessee cannot be admitted since the assessee has not deposited his tax and the assessee has not filed the return of income. When this matter came to the tribunal said that in this case, the CIT appeal has misapplied the provisions of section 249 subsection 4 clause B, because section 249 subsection 4 clause B applies in case of non-payment of advance tax, but in this case the assessee has not deposited the tax on regular assessment, and tax on regular assessment is the tax which is made by the assessing officer in the scrutiny proceedings. The tribunal also distinguished between the advance tax and the self-assessment tax. In the present case, the tribunal said that advance tax is the tax which is deposited by the assessee during a financial year, and self-assessment tax is the tax which is paid by the assessee after completion of the financial year, and tax on regular assessment is the tax which is calculated by the assessing officer by completing the assessment of the assessee. In the present case, the assessee has not deposited the tax which was created by the assessing officer according to the assessment order, and not the tax which was advance tax according to the assessee. So the tribunal said that in the present case, the provisions of section 249 subsection 4 clause B does not apply to the assessee, and the appeal of the assessee should be heard by the CIT appeal according to the merit. So the tribunal remanded this matter back to the CIT appeal. Friends, this case is a perfect example that there is a lot of pressure on the CIT appeals, because there are near about 6 lakh appeals pending in India at the CIT appeal level, and there are only 250 CIT appeal. So on an average, there is near about 2,400 cases with a CIT appeal, and as per some CIT appeals, there is a target of at least 50 appeals to be disposed of by them in a month. So just to count their number and just to complete their numbers, they are passing the orders like this in a very perfunctory manner. So this is again adding to the pain of the assessee, which should be taken care of by the Ministry of Finance and the Central Board of Direct Taxes. At the end of this video, once again I am repeating the name of the case. The name of the case is ROHINI Enterprises Private Limited versus Income Tax Officer, and this case has been reported in 112 ITR Tribunal Short Notes 39, and the date of the judgment is 17th May 2024.